Hello and welcome to a brand new video on the Business Box YouTube channel. If you enjoyed today's video, please leave a like and subscribe and leave a comment down below of what you thought. But without further ado, let's get into it. So in today's video, we're going to be doing an introduction to taxes and talking about what they are and hopefully aim to broaden your understanding so you can leave this video knowing a bit more about taxes than before you came in. So what is tax? A tax is a compulsory charge or some other type of payment that is imposed on an individual by a governmental organisation. This is in order to fund government spendings and various public expenditures. So why do we have tax? We've touched on this slightly, but for centuries taxes have been an important fact of national life. Without them, it would be impossible to pay for the country's defence services, its health, welfare and social services, its schools and universities and its transport systems. So all the infrastructure of a country relies on funding from taxes. So where are taxes spent? We've just touched on this, but taxes are spent in many areas of the public sector, providing valuable infrastructure for a country such as roads, public services such as healthcare and military spending for a country's defences. On the right, we can see a breakdown of tax spending in the United States, with the most taxes being spent on health and social security. So how are tax bands calculated? Taxes, people have different tax rates. You get taxed depending on your income and the value of assets you own. So in England and Wales and Northern Ireland, there are 3 income tax bands: the 20% basic rate, the 40% higher rate and the 45% additional rate. So the more you earn, the more you get taxed. Council tax has 8 bands, which can be seen on the right, bands A to H, with A being the least and H being the highest tax band. Simply, most tax rates are calculated based on your income and value of your assets, such as the value of your home. The more you earn, the more tax you pay. That is the general rule when calculating tax and figuring out how much tax you're going to be paying. Now there's 2 main types of tax, and these are direct tax and indirect tax. Starting with direct tax, a direct tax is a tax which is levied on an income or profits of the person who pays it, rather than on a goods or service. For example, national insurance or income tax. It's tax that is taken directly from you. Indirect tax is a tax that is levied on goods and services rather than income or profits. Some examples of this are sugar tax, value-added tax, or the tax that is put on tobacco and nicotine products. So just to go over some key terminology that you may not have understood in this video, we have levied. Levied means an imposed fee. So something that is imposed. Indirect is something with intervention, for example the sugar tax we just talked about, or direct tax is without intervention. VAT stands for value added tax, and that's just to brush up some key terminologies that you may not have understood in this video. So what have we covered in today's video? Well, in today's video we've discussed what is tax, why do we have tax, where taxes are spent, the different tax bands, direct tax, and levied tax or indirect tax. So thank you so much for watching this video. If you enjoyed, leave a like and subscribe. Leave a comment down below for any other video ideas you'd like to see in the future. I hope this has helped broaden your understanding around tax, and there will be more videos to come in the future. So thank you for watching, and goodbye.